Good morning, everyone, and thank you for joining our webinar today. And our webinar is titled Your Guide to the M&A and Financing in the Spanish Solar Market. I have a great setup of panelists that I would like to introduce you in a moment. But first, let me give you a rundown of how today's webinar is going to go. I will again give a brief introduction of the webinar itself, of our panelists. But before that, I would like to introduce Solarplaza. In case you're not familiar with us, it's our business to accelerate the sustainable energy transition via connecting solar professionals across the world. And we have over 60,000 professionals in our network, and we connect them not only via these webinars, but also with our conferences that happen across the globe. We also, in the past 2 years of the pandemic, we haven't sat still. We've been working on new projects, one of them being our Solarplaza consultancy. So I invite you to check that out on our website and see what we've been up to. Speaking of our conferences, this webinar is also a lead up to our upcoming Solarplaza Summit Spain conference that is happening physically in Madrid, exactly a month from now on the 7th of July. And by assisting this webinar, you are available to achieve 10% discount on the ticket using the webinar discount code below. And this is also a great moment to meet the speakers of this webinar in person. They will hopefully all be present. They've all been invited to join the event. And then if the conversation is interesting and we don't have time to answer your questions today, feel free to answer that question in person in Madrid in July. There's some technical issues that I would like, or technical notes I would like to point out to you. If you have any questions, you're free to put them down on the question box on the right-hand side on your panel. If you have any technical issues, will you please also put that in the question box? We will try to support you as best as we can. And we will be sharing the slides and the recordings to this webinar after the fact. So you will be able to see it again. With that, the moment we've all been waiting for, I would like to ask our panelists to come up on our virtual stage. And today we have a fully stacked panel with Lucia Gonzalez and Alvaro Baro from Ontier. Lucia is a senior corporate lawyer at the Department of Energy, and Alvaro is the Director Area Banking and Finance. Here we also have Alfonso Andres, the Director for Spain at AIP Management, and closing us off, Carlos Jerez, Head of Structured Finance at Nextwell Power. In order to start off the topic, I think I would like to ask each of you, Alfonso, Luis, Lucia, Alvaro, and Carlos, to give a brief introduction yourselves of your experience in the market. And maybe could you give a point to what extent are you active in the Spanish M&A market for renewables, or in particular solar right now? How does your day-to-day look, and how much does M&A fit into your workday? Alvaro, I'm sorry, Alfonso, I'll let you go first.
Okay, it's a pleasure. Thanks, Lorena, for the opportunity. Really excited to have this webinar and this discussion with these experts. My name is Alfonso Andres. I recently joined AAP a couple of months ago to open the Madrid office. Previously to that, I have been more than 15 years in the renewable world, in KPMG Corporate Finance as an advisor, and then in investors in the structured finance team, investing in wind for more than 10 years. Apart from that, I am also a coach. And very briefly with regards to EAP, because we are not known yet in the Spanish market, we are a direct infrastructure platform for institutional investors, mainly Nordic banks, and we have invested more than 5 billion euros. Our focus in the Spanish market, Lorena, answering your question, is mostly financing of solar and wind assets. So we are really, really active.
Thank you, Alfonso. Alvaro, I'll pass the mic on to you. Sorry, the sound isn't quite working.
Sorry, yeah.
Yes, I can hear you perfectly.
Thank you. Thank you. Okay, thank you, Lorena and Solarplaza, for inviting me to join this webinar. I'm been working for over 20 years in this in the energy sector in general. I work for a utility company and in traditional generation for 5 years, and after all, I've been working in renewable energy for over 15 years. and I'm working including several law firms and basically in project financing.
Thank you. Yes, I'll pass on the microphone to Lucia.
Thank you very much, Lorena and Solarplaza, for thinking enough here to be part of this interesting and relevant webinar. My name is Lucia Gonzalez, and I have been involved in the energy sector for more than 15 years. First of all, at the beginning, I started at a company, Cobra, in the renewable part of Cobra, and nowadays I'm the head of the energy sector at Untitled. I'm the director of transactional department in the sector here in Spain.
Thank you, Lucia. Then I'll pass on to Carlos.
Thank you, Lorena. Good morning, everyone. I am Carlos Jerez, responsible for structured finance and M&A at Nextwell Power, which is part of the Nextwell Group. It's an investment platform based in the UK, founded by two of the co-founders of Sonedix. And currently we have a presence in Spain. We have 200 megawatts under operation and under construction of solar PV, and we are very active in this space at the moment.
Perfect. Indeed, all of you fit the profile, the perfect profile for this webinar, which is not a coincidence, of course. And I'd like to then start delving into the topics we have at hand. And first, talking about how has the financing of solar projects in Spain been changing in the last few years, or are there any new trends? And I'll direct this question first to Alvaro.
Okay. Well, I think that if we take the last 10 years, 15 years, where we have several critical moments, including the moratorium in 2011 and the new regulation in 2014, the changes have been dramatic. We have gone from, I mean, the typical project was a small project in megawatts. So the economics were similar with a full turnkey project and also always regulated assets. And now we are in a scenario where none of the, I mean, very few projects are done with full wrap-up agreements, construction agreements, where you have to deal with a lot of interface issues between contractors. Where we don't have a certainty of the price of the revenues that the projects are going to get, and we have to deal with the prices, even if we are including PPA agreements in the transaction. And so, well, definitely the scenario has changed a lot. The players have changed a lot. And the way we regulate things in the contracts are quite different. Yeah, indeed.
Mm-hmm. Carlos, do you also see these dramatic moments in the Spanish solar sector in regards to financing?
Yes, I think first of all, I would say that now solar is highly competitive. Solar PV is a highly competitive technology, so it's probably the cheapest out there. So it's a proven technology. The lenders feel comfortable with the risk in terms of technical matters. So the complexity is low, even if there are some improvements in the technology and so on, like bifacial and other innovations that are becoming, bankable. But this is one of the key points. Now, solar is bankable without subsidies, and now we see additional layers of complexity, because sometimes you have a mix between PPAs and merchant, and PPAs are not the plain vanilla instrument we used to see in the past, or that we still see in some developing countries with a single utility. But now you have different type of off-takers, which are of course of utmost importance to lenders. Are they investment grade counterparties? Are they non-rated or non-investment grade counterparties? Then you have different types of PPA. So not only pay as produced, which is what was common back in the day. Now you have base load, you have solar profiles for monthly annual periods. So banks and lenders in general are also changing their take on all these aspects. I would also say that, and being a former banker myself for more than 7 years, banks want clarity. So it's very important that when sponsors approach lenders, they have a clear view on timing, on the status of the projects, the status of the PPAs, or the merchant structure that are going to be there in the project, because that's the anchor. The lender is going to look at the project from that perspective, right? And then also, of course, we are now seeing that inflation is also affecting projected prices. The market is changing dramatically because you also have regulatory interventions that are, unprecedented, but also the situation we are going through is unprecedented with the current energy crisis and the war in Ukraine, and also the increased interest rates and inflation, which is also something that is being treated differently by credit risk committees and lenders, because of course inflation is going to impact the economics of any projects, both on the revenue and on the cost side. And we are already experiencing that with something as simple as CPI adjustment for leases of the land for the project. Before, you could have an assumption of 2% inflation, which was reasonable, even lower than that. Now, all of a sudden, your OPEX may increase by 8-10% just for the land part. So that's obviously having an impact, and banks are looking at that. And to end up with this part on the approach of lenders, I would like to see, and I'm happy to, as a sponsor, to see that not only banks are active in this space, but we have institutional investors such as AIP Management, and Alfonso will develop more on what they do later. But there's a broader spectrum of money available to fund these projects, which is great news, because only with banks and only with traditional banks we would not be able to fund all the capex and all the projects that need to be deployed if we want to meet the targets that the government has set in order to make the energy transition to cleaner generation.
That's a great point, and it's always important to relate it to the experiences we're all having right now with the war in Ukraine, as you mentioned, and the inflation and the electricity market, which is imperative then to the deployment of more renewables. But also the great point you just made of a new financial organizations such as AIP Managers, and also I'll direct the question to you, because previously I could see, let's say, the big banks, for instance, Banco Sabadell being one of the few institutions available to fund purely merchant projects, for example. But is this something that you see happening more and more, and are you yourself at AIP Management willing to go for a merchant project?
Definitely. Thanks for that, Lorena, and capitalizing on the points of my colleagues. This brings me memories from more than 10 years ago, when a megawatt install of solar was roughly 7 to 8 million euros investment. And now we're talking about, although the capex is increasing, we're talking about figures well below 1 million, 600, 700,000, right? So, and I remember as well back in the day that the industry was lobbying heavily on governments in order to get feed-in tariffs. For example, there was a subsidy of above 300 euro per megawatt hour for solar. And the argument was that the technology needed to be subsidized in order to develop and be competitive. And now I guess that it is clear that renewables are super competitive. And as Carlos was saying, solar and I would say wind have a really similar levelized cost of energy. So they are the most competitive technology. So it's not about being green because it's nice. It's about being green because it's profitable, right? In this sense, and the evolution has been tremendous from super high subsidies to government tariffs, to PPAs with corporate counterparties, and to merchant. AEP management is focused on funding non-recourse merchant projects, because we see that in the long term there is a value for surfing the merchant wave. So if you can be for the long term on an asset, the value that you get taking this merchant risk is super high, and we are eager to support sponsors that are doing that, and we see that that it's a clear trend in the market. So you were referring to Banco Sabadell, Lorena, and institutional investors like us. We can bring benefits like not having a calendar, because we are protected with the long term. So in order to be able to have exposure to this great market with huge growth expected, I think that in the next 4 years, 15 gigawatt of solar PV megawatts are expected to be installed. So a lot of capital is going to be needed, and definitely the merchant option is super attractive for sponsors.
Thanks, Alfonso. And perhaps I hear a lot that there is a lot of capital coming to the market, and later on we'll talk a little bit about making sure that that capital is going to the right projects, or really the right partnerships to make sure that that capital is better managed with the right stakeholders. But we'll get into that. Alvaro, I don't know if you have any feedback points on these comments, or I think it's pretty in line with what you just mentioned. Right.
Yeah. Well, I think, yeah. I would say that it's important that all the way that we have gone through here in the development of renewable energy in Spain has taken us to be very adaptive, and from the contractual part of what we do to manage this risk from a legal side, you see how the structures are much more flexible. And you have much more options, and I think Carlos was saying it in the market that some years ago we only have banks, and they have, well, the way they assess risk, and now we have a lot of players as AIP and other funds and other institutions that are investing here, and you see that the contracts and the financial agreements and all the deals are more prepared to changes, and which doesn't involve to blow up the whole transaction when any circumstance happens. Because I think we have gone through so many different situations, regulatory, macroeconomic, and well, I don't know what else we can see. I think that maybe the focus was at the beginning technology, rather than technology 15 years ago. And now the technology, as you said, as Carlos said also, the technology is now very mature, so we are worried of other problems.
Indeed. And maybe then to have a shift from the more financial considerations to an M&A transaction consideration, Lucia, do you have any thoughts on how this shift from PPAs to accepting more merchant risk? Is that also something that you see in upcoming M&A transactions?
Yes, of course. As Alfonso said, a merchant option is super attractive right now, based on how the pool is right now. But from an investor point of view, the fact that a project has an investment-grade PPA makes the project more attractive. But the question is that this PPA is for an investment-grade off-taker.
I see.
How many you can get? There is no infinite the amount of investment grade players doing this. So
yeah. Indeed.
Yeah, I think that's one. Yeah, allow me to jump in. I think that's one of the challenges in the market, how to finance off-takers that of course have a need for energy and they want to enter into these PPAs, but they can be deemed non-bankable by some investors out there. So that's a challenge and an art sometimes. So you have to be creative and not only increasing the level of guarantees, but there are some insurance schemes that we've been, trying to design and implement. So in case of off-taker insolvency or bankruptcy, there is a way out, and the bank or the lender can get the debt repaid until a new PPA with an acceptable counterparty is structured, or the debt can be fully repaid or prepaid in case things go very wrong for the off-taker.
Yeah, and in this sense, I wanted to ask, because now we are in a scenario of high prices. So let's say that the generator is getting the ugly part because the PPAs are logically below the current market prices. So in the long term, this is a risk, obvious, that the financiers doesn't want to take. But I was wondering, what about if we go to a scenario of really low energy prices, where it's the off-taker that it's in an ugly situation? So having a super strong counterparty is good, but and this is an open question, having you guys here, what happens? Do you see the risk of a strong counterparty not wanting to take this loss and trying to break the PPA in a scenario where the PPA they are paying well above the current electricity prices?
Well, I think that 1 year ago, a couple of years ago, that was the only concern that we had, because we didn't expect it to have this, prices they have done. So we actually have, and we started speaking about this rebus sic stantibus clause and everything in the context of PPAs, thinking of eventual changes to regulation that could make structurally to prices to go down, because it was already in the rumors of changes in the marginal settlement of prices and so on, and we've worked a lot on that. We haven't seen this to happen, but actually now there has been a lot of different scenarios. Now we have changed the perspective, and now it's the off-taker, it's the generator who eventually will have the incentive to break the PPA. But I don't know. Normally we rely that if you have a bank behind you and you are, or you have Alfonso, if you have an institution financing your project that doesn't want changes to happen, probably you won't take this challenge. But yeah, well, I assume that most of your PPAs, ones that are previous to all these prices increase, are well prepared. They have the changing law clauses well prepared for this just to happen in a very specific situation.
I think that, for example, in this kind of situation in clauses that are being included as a REVS or change in law or MAC, we need to think how it works in a framework of a PPA, based that the objective of or the final objective of the PPA is to cover these changes and the change or the consequence that these changes can have on the price of the electricity. And of course, I think that you have a risk that is minimized if your off-taker is a stronger off-taker, but you never know what is going to happen after a sanitary crisis or economic crisis or.
And actually, I think that COVID has, because there was very, very little jurisprudence on rebus sic stantibus, and after COVID, there has been some precedents in real estate and in other sectors, but still there is some uncertainty how will courts will deal with these situations. So I think that the better you have it in the contractual wise, and you have excluded rebus, and you have a specific regulation of this risk, the better, obviously, for you.
Yeah, and thanks for the answer. And that brings me to what you just said, Alvaro, that it's the other way around, right? Now electricity prices are high. The old PPAs were much lower. but not also the PPAs, but the auctions. We are having discussions with the sponsors that got on solar PV assets prices well below 30 in the recent renewable energy auctions, and they're simply considering very seriously or going to just lose the bonds and go for the merchant option, because the value that it's left on the table is significant, right? So
yes,
we hear from many clients that
and in line with what has been mentioned, I think now termination provisions in one sense or the other are more critical than ever when you have extreme price scenarios, right? Even if it's, I mean, on one hand, when they are extremely high or higher than ever, like nowadays, or like my colleagues were saying a couple of years ago, they were, you know, at record low, and so the incentives for the parties to break or to terminate the contract can be there, but most of the time you have the financing, which is a critical element also in order to you know, prevent from these things happening most of the times. And also regarding the point that was made regarding the availability or limited availability of investment grade off-takers, I would like to add that I've been negotiating with them, and no negotiation is easy, of course, but when you have a counterpart that has a strong reputation, everyone wants to work with these kind of players because, you know, they are big names, then their conditions are set and there is zero or almost zero flexibility with regards to what you can put in the contract. So this is something that has to be considered also when entering into negotiations with different counterparties. So no one is going to make things easier because this is a business, and obviously and logically people try to defend their interest. But when you go with a counterpart that is not as strong, that has, you know, less negotiating power, then you may be able to end up in a slightly or better position.
Yeah.
Indeed. So perhaps I'm gonna make a small shift now to discuss a little bit the M&A environments right now in Spain. But in order to do that, I was wondering, Lucia, if you could provide some context in your experience of what does the M&A market look like right now, and how would you describe the status of the projects that are available? Because undeniably, what we see more and more is that many companies are looking to expand their portfolios via M&A transactions, or as projects are maturing, there are more options available in the market for what you would like to do with those projects. But I'm curious to hear from you.
Yes, until 5 years ago, the main players in the market were focused on acquisition of plants and in operation the Royal Decree 61, and M&A transactions were structured both through the acquisition of the SPVs or through the share purchase agreement or through the direct acquisition of the plant or the wind projects. But 4 years ago, thanks to the recovery of the sector and the growing in the development and investment, a new phase of development projects began. So this changed a little bit the landscape of the M&A in these projects, and the projects that were offered on the market were at a very early stage of development. So this changed the structure of the M&A transactions. So we are buying the SPVs, but we are buying the SPVs in 3 different ways. As the development, as the project is in determined status of development, or subject to the condition precedent to reach the ready-to-build status. And nowadays, a significant number of clients are asking us for the joint legal advice on M&A and financing from the very beginning, and it is important because they want to be sure that the terms that in which they are acquiring the projects will be the optimal for ones to finance afterwards these projects. So in these transactions, we are working together from the M&A department, and financing department. So I think that this changes a little bit too, and makes the client more conscious about the risk and the future financing of the projects too.
That's great, great overview. And would you be able to highlight a little bit of what kind of risks are available in these new forms of M&A transactions? What are the main risks, I would say, in the transactions in general?
Sure. I think that one of the main points in all these discussions and negotiation of the transaction is the development risk. Due that we are selling or buying projects that are under developing. So who is going to take this risk? The seller or the buyer? And this makes us different structures in the M&A transactions. So the sale of projects under development could be articulated as a sale and purchase subject to the condition precedent that the projects reach the ready-to-build status, as I said previously, at which point the transfer of ownership of the project can take place for the very beginning of the transaction or when the project is reached the ready-to-build. Depends on who is taking these risks, the seller or the buyer. In some of these cases, the seller continues with the ownership, risk, and development obligation until this project reaches ready-to-build status. We have been advising in several transactions to that the projects are being sold as is. The sale and purchase of the project was executed as a cuerpo cierto, so that the buyer acquires the project in the status of development in which it is at the time of closing the transaction. And it's the buyer who takes the development risk and often continues with the development of the project. But but there is some cases in which the transaction is articulated as is, in which the buyer continues, the seller continues with the development of the project under DSA. But in this case, the seller is acting as a developer, and it has not any relationship in between the SPA and the DSA. It's a completely different scenario. And in these cases, the development risk is taken by the buyer.
I think.
And yes.
Yes, I'm curious, Carlos, now Alfonso, if you have a similar experience, or where do you see the risk falling onto the buyer or the seller?
Do you want to go, Carlos?
I'll take it. Yes. So I think we could probably debate for hours on what ready-to-build status is and who pays for what and what's the involvement in the different parts as from the different parties, as Lucia was saying recently. So I think it depends mainly on the capabilities of the acquirer. Are they willing or are they capable to, do they have the resources to continue the development until RTB is actually effectively reached? Do they have the people mainly? Do they have the time? Or can they, is that a risk they can take, or should they rely on the seller so that they can, accompany them until RTB is effectively reached and construction can start and the financing can come in? Because all the pieces have to match in order to make a project successful. And I would also like to mention in terms of the landscape, the price, right? So the price of projects ready to build, it's been a very profitable business. That's why we had a boom of developers, even engineering companies. They moved into this business because they saw it was very lucrative, and it is. And I believe, and I'm not saying this is good or bad, or fair or unfair, but the reality is that they took some of the benefit of the decrease in the cost of technology, because when you looked at the total project cost of a project of a megawatt in solar, you for years we had seen, thanks to the LCOE, so the price of the investment was decreasing, or the capex was increasing, and I think some developers, smartly enough, and this is supply and demand, they took part of that, you know, change in price. So the cost per megawatt of projects developed increased considerably, and now we have strong appetite by investors, both national and international investors, that has kept prices very, very high. So this is also important. We don't know if this will continue, but in my view, there is a scarcity of megawatts that are actually RTB. So the appetite is there. Investors feel comfortable with country risk despite what's going on. So in my view, prices are going to continue high for some time.
What you are saying, Carlos, and you are just holding your smile, is a great moment to have assets and a seller's market, right?
I believe so, but it makes it complicated also if you want to keep growing, because then you're going to have to pay high. So yeah, so if you have both roles, buyer and seller, then it gets tricky.
I agree. I think it's a very exciting market moment, because there is a bottleneck in permits and licenses. So the appetite is high, but the number of ready-to-build assets, it's scarce. So there's a lot of competition. Then with regards to M&A, I think that M&A and financing comes hand in hand. We are approached by sellers that want financing to be attached to their offer to make it more attractive for buyers that want non-recourse financing. And then we as well see buyers that want our financing in order to be able to bid in competitive processes. And I see as well the trend that Lucia, Alvaro, and Carlos were commenting. I mean, before the acquisition of project was always based in milestones. So when the project is ready to build, you get the bulk of the money. But now we can see a lot of investors willing to take development risk and pay significant amounts for projects that have, for example, environmental impact assessment, the DIA, and then take the risk of projects not reaching the final ready-to-build milestone to be a really a complete project.
Indeed. And the relationship that you made a bit with the financing trends we discussed before, I think is also important in the status of these projects. Then perhaps I will lead into our next topic, and a little bit in these M&A transactions when you have the buyer and the seller, and perhaps people like Untier helping manage those transactions. What really is the importance of partnering with the right person, or the stakeholder management aspect? Because perhaps with the way that the market is going and how saturated it is, you could find a partner so easily, if I may say so. But how to make sure that it's the right partner, and how important is it? How is that relationship built? And maybe Lucia and Alvaro, I'll ask the question first from the perspective of Untier.
Yes, of course, in many of these transactions, the relationship between seller and buyer does not end with the signature of the contract. They are establishing a kind of shareholder relationship, and the seller usually remains as developer of the project, and unless the buyer chooses the schemas of a transaction as is. There will be an interim period in between the signing of the transaction and the time in which the project reaches the RTV status, in which the ownership of the project belongs to the seller, who continues developing the project. but the buyer already has acquired rights over the project, so which makes the buyer want to have control of the project and the SPV. In this interim period, the relationship between the seller and the buyer is essential, and a balance between freedom of the seller and developer to develop the project and the limits that the buyer has or want to have regarding the project are very important. So I think that to make a good investment and I think that a good relationship between the seller and buyer is essential. More in these cases in which they are going to continue with a relationship during the development of the projects. And I think that to make a good investment, we need to have clearly defined the rights and obligation of the parties. And the parties need to be aware of the procedure to be followed between them regarding the development, the inherent risk, the costs, and the expenses that each party must be borne. And I think that this is essential for the relationship and for the project too.
And also you have to take into account the financer from the very beginning. As Lucia said before, we get involved in the M&A transactions at the very earlier stage, not at this what intensity as they do, but we have meetings and we discuss what will be what the Alfonsos of the market will consider ready to build, what they can accept to have, what risks they can have, and you have in mind what the financer will require from the moment that you are going to sign one of these agreements. So it's a basic stakeholder also of these projects, and I will put it in the box bouncing for you, Alfonso, because I think that there are nowadays the financiers get this cup of almost a shareholder of a partner for the projects, and are more, and on the other hand, they are more open to assume project risks because they understand it better.
Yeah, thanks for that, Alvaro. We see life as long term. So when we engage in a transaction, we do not see ourselves as lenders. We see ourselves as partners. So we want to make the transactions happen. We want to have exposure to good assets, to good partners, and create value for the long term. And that's the reason why we can take much risk, and that's the reason why we are looking for people that see life as us. And we look for experience and reliable counterparties that have good advisors that are able to, in negotiation, solve problems and look for solutions more than squeezing. Can you say that? Squeezing the orange or the lemon. So risks are there to be managed. There are many ways, and you know better than me, guys, like condition precedents or other ways to manage temporary issues. So flexibility for us is a super strong word, and partnership it's another strong word, because position yourself in the lender approach, like I don't like this, I don't like that. When this is solved, you come back. It's not the way we see life, and we want to make a good project happen. Take on several risks and solve them with good partners.
Yeah, the same question is directed to you, Carlos, because previously we were talking a little bit, I think, on the quantitative side of what makes a good M&A transaction, and I think now we're talking a little bit more on the qualitative. But how would you then connect the two, and how important is the qualitative management?
Absolutely. I would like to tackle this question from the wider point of view of what a stakeholder is and how important it is to look after your relationships, because reputation is everything in the market. And now there is a strong social resistance in Spain, in certain parts of Spain, by particularly people who live in the rural areas, against mega plants, because they see that as a threat rather than an opportunity. So from the Next World perspective, what we do, and we are an impact investor, which means that we, of course, are here to make money, but we look at the triple bottom return of things. So also in terms of environmental impact and social impact. So we do have a social fund that we apply, that we work with in every project we develop. So what we do mainly, it's five things. So one, we promote self-consumption. So we enter into partnerships with local institutions to design and donate rooftop or solar rooftop for some public buildings. So in our plant in Posadas, Córdoba, we have donated a plant to the public school, en el Colegio Nuestra Señora de la Salud, so that they can save up to 80% of their energy consumption. So with that money, they can devote, those funds to help students and to do other activities. Then we also bet on, or we support training, local training. So we have partnerships with vocational schools in the areas where our plants are located, because now there is also a lack or a shortage of skilled labor to work on the construction and operation and maintenance of renewable energy plants. So we also work with them in order to give them the right training, access to equipment, and so on. And we also favor local employment, try to create opportunities for local residents, so that they can also benefit from these huge investments that are being made in, the España vaciada, or areas where the politicians are not really paying a lot of attention to. And last but not least, we also try to do some promotion of local culture and local produce. Like we also have, for instance, some production of olive oil from one of our plants in Córdoba, and we also try, to create some additional business for people who are not directly involved in the project, but we believe these pays off in the long term, and we take this very seriously.
It's great that you've taken the stakeholder management aspect, and I myself was also only thinking about those involved in the contract, but beyond that, of those overall impacted by a project, for example. And I think indeed with the trend that we see in Spain and also Portugal a lot is that the communities are getting very much involved in it, and if they're not involved in it in a positive way, then they'll react to it in a negative way. So it's an important consideration to have. So thank you, Carlos. And perhaps I'd like to ask you, Alfonso, a question in particular, because we have you on this panel and you also have a very impressive wind background in the sector. And I think it would be great to hear your interpretation of how would you compare the M&A and also the financing, I guess, a little bit of the wind versus solar projects, and outline what you see as are the main differences or any lessons learned that can be pushed from one sector to the other.
Sure. Thanks for the question, Lorena. I would say that for me the main difference between wind and solar would be that solar PV speed is much higher. I would say that PV is fast and furious. A lot of players, much faster in terms of development, because, for example, when you are financing wind, you will need a 1-year measurement campaign. But you do not need that for solar, because the availability of the solar radiation data. So that is much shorter. Then for every megawatt of wind that it's going to be installed in the coming years, 3.5 megawatts of solar PV are going to be installed. So the amount of megawatts that are going to be installed is significantly higher, because now wind is close to 30 gigawatts, installed, PV is close to 15. So the growth expected for solar is significant. There are differences in terms of investment figures, being the wind above 1 million and solar PV capex are close to 700,000, and both will have a similar levelized cost of energy. So I would say that the competitiveness of the technologies are neck on neck. And something that surprised me coming from the wind world, where I could see assets spinning from 2,500 hours to even 4,500 hours with huge differences. You go to the solar world and you see that in Spain, the typical asset it's going to be 100 above or 100 below 2,000 hours. So it's much more homogeneous. And one of the hot topics that we need to handle on the financing side is the cannibalization effect. As usually the sun brights during the day, and there is going to be much more installed capacity coming. What is going to happen with prices? Are they going to be depressed or not? We see that in the long run, and even with this cannibalization effect, the prices, even in the worst scenarios, are well above 40 euros in nominal terms. So merchant makes much more sense from an economic point of view, but this is something to take into account. And as well, coming back to the point of Carlos, we see as well a lot of pushback in the permits from local communities, and I think before it was more linked to wind because of the potential noise, because of the so-called visual contamination, but I think it's a trend that it's coming as well to solar.
Perfect. No, and I do believe one other comment and a conversation we've had before were the number of parties that you can have in solar compared to wind. I myself am not active in the wind, but I could list Vestas or GE or Siemens, and then nothing much else comes to mind. In solar.
Thanks for bringing that, Lorena, because we were discussing the other day with the other panelists that solar has less complexity, but then for me, coming from the wind world, well, the number of players is much lower. You have Vestas. Well, there has been some consolidation in the process, but you have Vestas, GE, Siemens, Nordex as tier one, and then you go to Bloomberg New Energy Finance to see what are the top panel manufacturers, and you see that there is 50 tier one manufacturers of PV panels. So it's like, okay, so if 50 is the tier one, what are tier 2 and 3? So this is madness, right? So on the one hand, it's clear that the wind technology is much more complex than solar. But on the other hand, the counterparties that you are dealing with, I would say that are easier to manage, or it's easier for them to keep their promises and deliver on the contract. And I have the feeling that it's a little bit wilder when you are in the PV world and you need to deal with a lot of Chinese manufacturers that do not even have presence in Spain, and it's very, very necessary to have a good EPC in order to have an investable project. So as said, complexity for sure, wind is more complex, but for me it's surprising due to the counterparties involved that solar should not be underestimated at all.
Yeah. Carlos, I saw you smiling at that comment of the amount of counterparties. I'm guessing you agree?
Yeah, absolutely. I was going to ask Alfonso how many out of those 50 are from China, and this is also something that now with the current crisis, also in terms of logistics,
easy, right? 50.
100%. No, I don't know. I'm not sure, but yeah, I bet it's
50.
More. Okay, well, then when you have the challenge of logistics, and also we saw that when you have too over dependence in any given sector, we saw it during the pandemic when it came to sanitary and medical equipment, that we rely too much on certain countries to provide us with certain components. Then we are taking a big risk, and then this is being experienced, and this is creating pain for developers or promoters that are waiting for panels to arrive on site, and then the clock is ticking. Then that can put you in danger, the project in danger, because you have commitments with authorities, lenders, etc., etc. And I would also like to say, in line with what Alfonso said, the cannibalization and intermittence of renewables going forward, just that's maybe my concluding remarks, because I will let also my colleagues to also share their views. But I think going forward, the intention and by the government is there, so the policy intentions are very clear, and we may even exceed the targets. But there are some challenges out there, because there is too much renewables, too many renewables at the same time. That's going to create a problem unless you have hybridation and you can use energy storage. But the capex for energy storage is still not competitive unless you have subsidies, but not everyone can get a subsidy. Then you have, everyone is talking about hydrogen. Can we use these outstanding features that we have in Spain, lots of sun, lots of wind, to produce cheap hydrogen, green hydrogen, and then export it? But then it comes to mind that we will have issues to export. Is there an interconnection capacity with our neighboring countries, which are probably the logical buyers, or the buyers that would come to mind for this cheap energy or energy produced in Spain? And then last but not least, you have adjustment services by the system operator, that it can be an additional source of revenue. So it's not just you just sell what you connect, but you also participate in the frequency market, the capacity market, and the balancing markets that are still something relatively new for renewable energy generators. But the big players have been making a lot of money from this market, and now the level field is opening up. So there are opportunities out there, but with the challenges, as always.
Yeah. And Carlos, all of those could be a separate webinar. We talk about supply chain constraints, we talk about storage, talk about hybrid. Indeed, but go ahead, Lucia.
I think that it's important to highlight something that Carlos pointed out regarding the future capacity tenders, and that through which the government is trying to avoid kind of cannibalization of the sector too. But capacity tenders, although they have not had the expected implementation or legal development, for the moment we only have a reference, the just transitional node of Andorra. But it is expected that several criteria, technological, technician, and the maturity of the projects. But it is expected to a high standard of economic, social and social-economic, and mental criteria that Carlos already say as a good example. And this criteria is going to play an important role in the determination of the interconnection rights, or as part of interconnection rights for new projects. So this is a new strategy of growth for some of the players in the sector. And now I think that the government is trying to control who is getting the interconnection rights in the grid. Indeed. And regarding wind and solar difference, in our opinion, we do agree with Alfonso almost in everything. And base that the wind project are more complex and long lasting over time. We mean that on 13 occasions, more time elapses between the signing and closing of the transaction. So this needs to be agreed between parties and regulated in the agreement. And some other important contractual aspects are the EPC and O&M regarding these projects too, that are going to have an impact on financing and if those are closed on the M&A transaction too.
Well, as Carlos said, when we come to hybridization, we will have the perfect storm. We will have the complex technology of the wind, and we will have the complexity to face interface issues between the contractors of a PV plant. So
Exactly.
it's becoming more, yeah.
Yeah, the conversations are definitely becoming more high level, and also not only just on the topic of financing and M&A, but then if we talk about integration of technologies, and it's very exciting to see where the market can go, because the potential in Spain is really is huge. But starting with conversations like these in this webinar, I think they're very enlightening also to the attendees to hear what your experience is in the market and really what you see are the main challenges and main opportunities. So I thank you all for that. We are reaching the end of the panel, and I don't want to go too much over time. We received at least one question here that I see that perhaps I will ask the panelists via email, and when we send out the recordings, we'll have a brief line. But again, these are answers that we can have at the conference itself, or hopefully in future webinars. Just for you to know, the question was really focused on how does the valuation of a transacted asset change with the linked route to market? So how would a buyer factor in the risk of a merchant project versus the stability of the revenues of a contracted one, which is what we spoke about more in the beginning of this webinar. And I'd like to thank Mr. Kahl, who is the founder of Energetics, for putting this question in. Perhaps we can answer it not on the webinar since we've reached the end. But I was going to ask all of you to give a concluding statement, but I also believe that this last comment that you gave was very nice, unless if you feel there's anything you would like to add for the audience before we close off the webinar, feel free to do so now.
Yeah, if you allow me, I think there is no coming back from renewables. It's not only the future, but the present, and regardless the market noise, I think the Spanish market it's super exciting. So having the chance to support the energy transition by financing this volume of projects that it's coming, it's a pleasure, and in just one word, excitement.
And in just one word, I don't know if you, Lucia, or Alvaro, or Carlos could do that as well.
Well, I will say. Yeah, I will say similar thing where Alfonso says that since this has become some changing, and there are so many challenges, so many alternatives in the market, in the technologies, so much potential to do things. This has been fun because this is not just to replicating one transaction after another. But in each transaction, you have different players that have different views how to assess the risk and how to manage it. And well, you can be creative and you can do different things. Yeah. And you have also the fund that gives them the government with their continuous challenges to us.
Lots of fun.
So I think that all of us, we are going to have a lot of work in the upcoming months and years, and so we need to take this opportunity too, because I think that Spain is a model to follow in some aspect for the other members of the European Union, and we are a step ahead on that. Thank you.
Yeah. Thanks, and I will, of course, I couldn't agree more. It's fun, it's exciting, but it requires, as also Alvaro said, adaptability. So just doing, business as usual, the bread and butter, what worked in the past will not necessarily work going forward. So you have, to be open-minded, and every player has to do that. Financiers, investors, contractors, basically advisors. Everyone, you need to adapt as the market evolves.
Well, thank you to all four of you. I think this was a great conversation. I'd like to remind attendees that we'll be taking these conversations more in depth, like what Carlos mentioned, the storage side, the green hydrogen side. Those are all a full day conference that we have in July where you could meet our panelists today. And here's an outline of what we have coming up at Solarplaza. But really, I'd like to highlight Alfonso, Lucia, Alvaro, and Carlos for the high-level conversation we had today. And I'm eager to see what you guys are up to in the future. Thank you so much.
Thanks a lot.
Thank you.
Yes. Bye-bye.
Bye-bye.
Bye.